Hello and welcome, traders. I am Rachel Dashiell, Senior Manager of Trading Services and your host for Trading Price Patterns. Now, this is a webcast. This is a class that we focus on building off of some of the basics of technical analysis to identify and trade price pattern breakouts. So if you are new to technical analysis, definitely feel welcome to stay, but you may want to check out our Getting Started with Technical Analysis class first. Now, I am joined in the chat today by my colleague Brent Moores. Please chat in your questions, comments, requests during the session today. And please follow us both on X. I am Rachel CS. He is Brent Moores CS. We post a lot of charts, updates, ideas, all talks around the market there. Now, please also like this video and subscribe to us on Trader Talks Schwab Coaching. Now, I have quite a bit of bottom reversal type patterns for you guys, so we're going to talk about those today while also spotting momentum divergences as well and how that can assist you with spotting out price patterns and looking for that confirmation on the break. So before we get started, let's cover some of those important disclosures here first. So options carry a high level of risk and are not suitable for all investors. The information that we're going to cover today is for general informational and educational purposes only, should not be considered any type of recommendation or advice. And we're going to use the paperMoney software application today to place our trades. Keep in mind that there are some differences between paper and live. Now, a couple exciting things coming up. We have looks like we have this slide needs to be updated actually. So we have the Boston workshop this weekend actually. So if you're going to be there, like I will, please holler in the chat. We're very excited for that one. And then our next workshop coming up is our Chicago Market Drive. We have one at the end of May as well. I believe it's in Santa Clara, which isn't shown here. So I need to update this slide for you guys, but lots of exciting workshops coming up here soon. Now, for our agenda for today, we're going to start with that market overview like we always do. We're going to review our past trades. We're going to discuss price patterns on multiple time frames, go in and place new trades, and walk through our trade management. So that is our agenda for today. Let's dive into the fun in thinkorswim. So today, is it going to be a monumental day or not? We don't know. We have gotten actually within one single point away from those all-time highs back in January. So we are very, very close today. Seeing a little bit of selling pressure just in the last hour or so, but definitely very close. Now, remember the closing price is most important. So that is one of the tenets of technical analysis, or one of the first things you learn is that the close is the most important price. So we're going to switch this to a line chart just to kind of show you this here. And now the market's not closed yet, but as long as it closes above our prior highs, above, let's see, our prior closing highs above 69.78, that is pretty historic. So if we're going to make new highs on a closing basis, that's even more confirmation this bull market is back. So keep an eye on that. Obviously, we won't see that close for a little while here, but all kind of things to keep in mind. Now, another thing I wanted to point out, I've shown this in a couple webcasts that I've taught this week, and this is just our relative strength grid. And so when we see this momentum pick up from the lows, we've seen quite a strong V-shaped type recovery. We've seen breadth thrusts kick in. And now what are we doing? We're seeing some of those late cycle leaders like energy, materials, industrials, healthcare staples, all of those are looking like they're rolling over. Uh-oh, where did I go, you guys? I guess we forgot to pay the bill, like Ricebird said. Sorry about that technical difficulty here. We were just talking about how some of our more cyclical risk-on sectors like discretionary and tech are seeing bottom reversals here. Again, another supporting piece to the entire picture of, hey, this bull market, it's back. Maybe it never left. So just wanted to pull that up there. Now let's go and review some of our old trades. So We had a couple old trades from last week. This was one of our best ones, actually. So we're going to look at Coreweave first. Remember, we took a trade. We went long at 88.12, right when we saw the breakout of this falling wedge. We had our stop at the low of that pre-breakout candle. We took half of our profits right at 103, and then we took the other half of our profits here at 114. And what do you know? Price is actually retesting that level today. Um, we're going to actually look at that one later for another pattern that it possibly has been forming. So, but that's one of our trades that we exited last week. They hit our targets. Another one that we are still in, we had this inverse head and shoulders on the shorter term for FRO for frontline. We still have our stop in place. We're going to move that up just a tad right to that prior low that we saw that got retested. We had our entry in at 36.56 and our measured move to the upside. That one is just taking its sweet time. So we're waiting that one out here. Another trade that we have been in is this double bottom in Firefly Aerospace. So we took our trade with a move above 34.33. We had our stop at the midpoint of this very large candle. We are seeing a little bit of retest for that today. Now, if we do have a hold or close above the high of the low day, a confirmed bounce from this level, that may give traders even more conviction to possibly add to this position, or may give traders that missed that initial breakout, it may give them another chance to possibly enter into a position in this double bottom retest of Firefly. So again, we have our measured move to the upside, but we're stretching out at that resistance there. So that trade's still in. And then one from a couple weeks ago, we put in an iron condor on Coinbase. We are up on that one as well. I'm going to show that trade that we have. We have about 9 days left till expiration, so we will likely close that out next week. You can see price is still trading between our short strikes of the 185 and the 215, which is exactly what we want it to do. So we want it to stay between those short strikes because then we keep all of our premium. So those are our trades. Now, let's look. I just took a look at you guys in the chat. Move away from AOL dial-up, Rachel. Believe it or not, I was actually still around for the early days of that. So that dial-up signal has never left my brain. So we're going to move to some new trades today. Get excited. There's actually a lot here in my watch list that we have for possible patterns. The first one we're going to look at is actually Coreweave. So we took profits in our initial position. I'm going to take some of these drawings off. We're going to remove these drawings, clear the drawing set here. So we obviously got out of this trade, but now I can see another possible pattern that just formed and broke out here. So if you guys are seeing exactly what I'm seeing, put that in the chat from what pattern that may show up to you on our 1 year, 1 day chart here. But while you guys get this started, I'm going to start drawing this pattern here actually. And would you look at that? It looks like we have a little bit of a double bottom pattern here. Now we have a downtrend that was in place. We had a low that got carved out. We had price rally up to a valid level of resistance, and then we had that sell off again to retest those lows once again. And then just back up, we just broke out roughly 2 days ago there on this one. So something that we want to look at as well, especially when we're looking at some of these possible bullish reversal type patterns. I know some traders will look at momentum as kind of that secondary confirmatory type indicator. Remember that momentum is just a derivative of price. That wasn't a word there. A derivative of price that we have, and it looks like even though price was retesting these lows during that time, we still had higher lows getting carved out in the RSI. And even with this breakout over the last 2 days or so, we're seeing those overbought levels in the RSI confirming that, hey, this breakout looks like it is valid. So it does look like a valid breakout. Momentum is confirming it. If you want to throw on some volume on there as well, some traders may use volume bars to confirm the breakout as well to show that there is additional participation in that break of resistance. So this is actually going to be another one that we are going to trade here today. So we're going to go back into this trade, but in a very different way. Now, I wrote on here where we see a 3% confirmation. This is supposed to say 3%, not 13. Let me put that back. Here we go. So in this class, we always talk about how we wait for the pattern to actually be complete, meaning that for bullish reversal patterns, we see a breakthrough upside resistance of a decent filter. So sometimes for a trader that may be one or two, maybe even three closes above that level. Sometimes it's a percentage move. A lot of times in this class, we use the 2% rule. Lately, we've been doing a little bit more of the 3% rule. So we're going to toggle back and forth between both of those, the 2% rule, the 3% rule for confirmation here. But especially since this is retesting that prior level, we're going to wait for a little bit more confirmation to the upside yet again. So we're going to use that 3% confirmation for our entry this time. And if we take a measured move, which is the depth of the pattern here, so we're just going to take the lows that we see here, that's about a $47.50 move. So that's a pretty decent move that we could see with a break here, that retest, and we're just going to place that right on the breakout point there to give us our possible measured move. And the reason why is because markets love symmetry. So it took about, let's say, roughly 5 months for this pattern to form. So it may take roughly 5 months for it to reach that price target. Also, because that accumulation happened within such this wide area or wide zone here, the market's going to like that symmetry to the upside as well with that possible measured move. Now, we know that there's no guarantee ultimately that price is going to reach that level. Maybe it runs into a little bit of resistance here at some of these former highs that we see here right around 150 or so. So 150 versus 163. So that could be an area where a trader may say, hey, I want to take a profit right when it possibly hits resistance there. So this is giving us a little bit of a guideline on what we could do with crafting this trade. Now, where could we possibly put our stop? Well, let's use the edge of this breakout candle, this initial one, to place our stop down there to say if it goes below 103.87, we want to get out of this trade. Now, this is still a favorable risk to reward. You have about $30, a little more than $30 on the upside. You have roughly $14 on the downside. So that's more than a 2-to-1 reward to risk there. So that would be favorable for a trader there in that case. So what we're going to do, since we are above that 117.60 now, we're going to place a trade for a first triggers, one cancels another. We're going to keep in mind our risk parameters for our account. So we are not going to risk more than $10,000 in our trade, which is 5% of our account from where we started at 200,000. And then we are going to make sure that we minimize that loss to the downside, stay within our 0.5 to 1% risk from the risk that we're taking, which is the difference between our entry and our stop. So let's build that order here on this one for Coreweave. We're going to take buy custom, and we're going to do the $10,000 OCO. So that was that custom order that we've built. Okay, so we're going to use a market order on the entry. That just tells us, hey, we just want to get filled at the next available price here. So we're going to use that. We're going to use our limit on the upside, which is 148.80 there. and our stop on the downside, which looks like it's 103.87. Now, what we can do with this, if we want to wait a little bit more to say we want to wait to see if price closes above 117.60, what you could do on your entry order is you could come over here to the right hand side and click on that little gear, and you could put in a condition here. So let's just do this for kicks and giggles here. So let's just say we're going to wait to submit this until tomorrow. So we're going to wait to submit this until tomorrow, April 16th at market open. So we're going to put 30. Okay, so right at 9:30 at market open, only if the price of Coreweave is greater than or equal to, what is that, 117.60. So we'd have to watch it a little bit to tomorrow morning to see if this order is going to get filled or not. If it is not above 117.60, then it is not going to get a fill, but at least that is going to prevent us from maybe getting into that trade too early instead of really waiting for that concrete confirmation. So this gives us the chance to say, hey, wait till we see that close above that level. And if the price is above that level by the open, we are going to send a market order there. So I'm going to hit save there. And we are going to hit confirm and send and place this in our price patterns class. So we're going to hit send there. Any questions on that one, you guys? I'll be looking for your questions there in the chat, but seems like everyone's following along so far. So got through our first trade. Let's go to another one here. We have a few double bottoms in this market. Let's go to Oracle real quick. So we're actually seeing a similar thing, similar setup in Oracle as well. And so what I want you guys to look for, whatever scan that you're putting on, especially for these bottom reversals, maybe you're saying that, hey, the RSI had reached oversold levels less than 30, and maybe the price of the stock is below its 50 and 200-day moving average. That's how you can kind of look for some of these bottom fishers here. But we don't necessarily want to go fishing, bottom fishing, until we see that confirmation of a possible reversal, because sometimes price takes a little bit of time, sometimes a lot of time to craft in this bottoming formation and really take that repair really wait for that repair to be underway and constructive with a breakout back to the upside. So we typically, as traders, don't want to be buying the exact possible bottom here, typically, just because we may be waiting for a while and it may tie up our capital for quite some time. And we know as traders, we want to make sure that if we are in a position, typically a trending one, we want that stock to be moving. So we saw that low getting crafted out here. We saw an inside bar. So that gave us a signal of, hey, this is an indication of a possible bottom. But then we saw that price traded in this kind of range movement for a while. And you can see as it traded in that range and retested that bottom yet again, it made a higher low on that RSI. And what does that do for us as traders? That gives us our radar to say, hey, this is giving me an indication of a possible bullish reversal. Now, we have to wait for price to confirm that as well. So seeing a close above the high of the low day, like we saw here, where you had a power move up from that level of crucial support, that would have given a trader a confirmation to take a trade there. Now, what we're seeing right now is price is retesting this level to the upside that it did before, and this crafts out a W or a possible double bottom pattern. Now, we have a little bit more conviction in this one as well, just like with the Coreweave one as well, where we've seen momentum turn from the downside. We like to see it picking up here. So we've seen momentum has waned and it's turning up. It's actually almost reaching overbought levels at this point, which is confirmatory of us making a higher high. which is a good sign, a good confirmatory sign that we're seeing. Now we just want to wait for a little bit more confirmation with that 2% move above this level of resistance. And again, a trader may also look for volume confirmation too. So if we do have that final breakout tomorrow, we may want to see if it is on an increase in volume, because that furthermore confirms that, hey, this is a true valid breakout. We're seeing increased participation on the break of this resistance level. So let's look at the chat here. Does not that high RSI reflect a pullback? Why put a trade? Okay, great question. So a higher RSI is what traders actually want to see in uptrends. So the RSI can actually be overbought for a certain level of time or oversold for a certain level of time. And so typically a trader actually does want to see a break above 70 when you're having that true break of resistance there. Now it shows that it may be overbought, but again, if price continues in that direction, that RSI could stay overbought for quite some period of time, because essentially all that RSI is telling you is it's giving you a ratio of up closes to down closes, and it's looking at that past 14 days. So that is actually a good sign here, especially since it's in a bullish regime back above 50 as well. So that's why we're looking for that as another indication of conviction in this possible trade. So now, a couple things you could do with this one. Now, there is no earnings coming up. The implied volatility percentile is relatively low. So if you did want to put a conditional order in on an option, such as a long call option, maybe you wanted to use a bull call spread. Maybe if you did see a confirmed break above here, maybe you're selling a put spread as well, even though the IV isn't as inflated as you'd like it to be for a seller. But with a lot of option strategies that you could use here with trading this double bottom pattern, the volatility regime and environment would favor option buying in this case. And the reason why I'm saying that is because well, actually, we got a little bit of influx in that. Now it's kind of in the middle here. So we're having an IV percentile of 52, so between 0 and 100, right in the middle. So yeah, I guess you could go either way in that case. But typically you do see implied volatility increase with breakouts in either direction. So it kind of makes sense that implied volatility is picking up here. So in this case, we're going to measure this move, and we're going to see what our measured move to the upside could be within a certain amount of time. And we're going to place that right at the breakout point. And thank you, Brent, for putting that in the chat, because that was kind of the point that I missed. It's a bigger concern if the RSI is high and declining, or if the RSI is making a lower high when price is making a higher high. So when you see that turnaround from that 70 level coming back below the 70 level, that can be like a algorithmic or systematic momentum shift. So yeah, good thing to keep in mind there. So our measured move is placing us at this former level of gap resistance as well as these former highs. So isn't this funny how the math tends to turn out here? Again, not a guarantee that price will reach there, but it did take roughly 2.5 months for this to form. So this could take roughly 2 months to reach. So if you're buying call options in this case, you may want to look a few months out from expiration, probably about 3 months out, just based on the time and price symmetry there. Now, as far as where we could put our stop, if we did see that breakout above 175, we could put our stop, we could do a tight stop right at the low of today's candle here. Or we could give ourselves a little bit more room and put our stop right below at 161.56. I think I like the idea of that tighter tighter stop better since it gives us a more favorable risk to reward there. So we're just going to use stock in this example as well. We can move through the trade a little bit quicker, but of course we kind of talked through some ideas and how you could possibly construct this trade. So we're going to go to the $10,000 OCO trade, staying within those risk parameters of our account. In this case, since the price of this stock has not yet moved above our 2% confirmation, our rule there, we are going to use a buy stop order. So if we change this order to a stop, this is going to say to the market, hey, wait until the price of the stock reaches 175.18, then send a market order. So a couple risks with these to the upside and downside. The price could gap up or down, depending on what the stock is doing in the extended hours. So when the market opens, you may get a fill that's not necessarily very close to your stop or your activation price. So keep that in mind. That is a major risk with stop orders. So we're going to send a market order when it reaches that price. Now we have our upside resistance at 208.25. We have our downside stop at 166.21. Again, when it hits the price of 166.21, becomes a market order. There is no guarantee that it will be filled near or at your activation, and it's just going to be filled at the next available price. Not sure why that moved there. 166.21. Okay, everything else looks okay. We are going to hit confirm and send, and we are going to place this trade in our price patterns class again. So, great question here from Eddie. Why not use a stop limit order instead? So, the reason why I am choosing with this example trade not to do that is because if we do see a gap down in price overnight or from the extended hours, if we have a limit price that's right below our stop, but that stock makes a larger gap move down, we run the risk of not actually getting filled on that limit order that comes after, because the price of the stock would actually have to go back up to that limit order to get us a fill. So if we do see a break of that 166.21, we want to get out of that trade immediately. Now, you have pros and cons of both. It depends on what your goal is. In this goal of this example trade, we're looking for the speed of execution if price reaches that level, but you may be looking for a little bit more control over the price. So if you're looking for more control over the price, you may be likely leaning towards that stop limit order. So really, really good question there, Eddie. There's going to be pros and cons to all of these different stop orders. So that kind of gives us a chance to talk about a little bit of that. So let's look at another one here. Which one do we want to do next? Do you guys want to see a range breakout or an inverse head and shoulders? Because I think I want to kind of see both. We're going to look at Nvidia next, actually. So Nvidia is another one where we have been trading in this massive range for really about 5 months or so here. Really from mid-November, mid to late November, we've seen this range resistance reside right around 195. We have this range support right around 170. And I kind of want to talk about this one a little bit more because this is something that you actually see pretty frequently with either new yearly lows or just a level of support that's been kind of tested a few times, and especially in range bound price action as well. So what you'll see quite a bit of the time is if a stock is retesting this level of support that it's touched quite a few times, you may actually see on that last retest that it's ever going to have, you may actually see price make a lower low, because what it's essentially doing is the market is wiping out all the liquidity that's at that level, because market participants know, smart money knows that, hey, if price has been tested at this level multiple times, there must be a ton of stop orders there. So, because that's what we do as traders is we look for areas to manage our risk and we say, hey, if it goes below a certain level, whatever our filter is, we want to get out of that trade. And so essentially, the market knows that this is going to happen, which is why sometimes you do see that sweep of liquidity to the downside. You may see those stops get triggered there, and then you may see price move quickly back up to the upside, which is what we saw here. We had a failed breakdown and we had a close above the high of the low day, this being the low day here. And notice when this was happening, you actually had that divergence in momentum. So that could have been your first hint that said, hey, this may be a failed break of this level. So that may be a failed break of that level. And then we had price just rip in the other direction. And so typically when you see price patterns fail, which they do quite a bit of the time, always remember that failed breakouts tend to turn into fast moves in the opposite direction. And so that is something that you are seeing here. Now, I did not coin that quote. That was Brian Shannon. He is another technician. He does a lot of work on price patterns, anchored VWAP, things like that. And he made that observation that, hey, every time you see a pretty quick breakdown, failed breakdown here, you're typically going to see price rip in the other direction. And this is definitely what you saw just within a 2-week trading period. You saw price go above this level of resistance here. And if we're waiting for a little bit more of our 2% confirmation, we may want to wait for price to move above 198.46. But if we take the entire depth of this range, we're just going to take that down from the highs to the lows. That's about $24 here. And what we can do as traders, we're going to take that depth of the pattern, project it from the breakout point. And where does that put us? Well, that puts us above all-time highs, right around 219.18. So kind of close to 220. So that is our possible measured move there. Now, where could we place our stop? Well, look at this gap here that's going to act as a valid level of support. So if this ends up being a false breakout, if our order gets triggered and then tends to reverse the other way, which 2 false breakouts, kind of rare from both sides, but if it does, we want to make sure we manage our risk to the downside. So we're going to use the low of this candle, the start of that gap. We're actually going to look a little bit below that gap. Because we talked about how sometimes you'll see that low get taken out, but it may hold that whole number at the lows. So that low was 190.77. We're going to put this at 190.10. So yeah, a lot of times you see that low get you'll see if a retest with that low getting retested and then price may rip back in the other direction. So we're going to make sure we don't get whipsawed out of that trade if we did have a little bit of a blip, a little bit of a retest of the inside of that pattern. So we're going to put it at 190.10 here. So implied volatility is relatively low. The reason why we're not going to use an options trade in this scenario is because it does add more complexity to the order in this case. We could use a conditional order though that says, hey, whatever the price of the option is at the time that the price of the stock is 198.46, send this option order. So you could use that in some trigger offsets. I cover those a lot in my long options class on Tuesdays, but we're just going to keep it simple today and use a long stock order. So if you did want to get a little bit directional, you're looking at a bull call spread, you're looking at possibly a long call. Keep in mind the time that it took for price to reach there. So you're probably looking at a leap possibly, or even just like a longer dated option, maybe 7 months or so. So keep that in mind as you are looking at the time of the price pattern. You're going to factor that into your trade, especially with options as well. And yep, Barbara, I think I just answered your question there. Great question. Yeah, so you're always going to look at the time that it took, and then remember that with options, you have that 30-day curve with time decay, with theta decay. So typically at that 30 days till expiration mark, you're going to typically see theta decay or that time decay really kick into high gear and start to melt away. And if you're a long option buyer, that is something that will work against you is that time decay. So typically what traders do is they say, hey, if this took a roughly 6 months to form, I want to add 30 days to that. So if this took 6 months to form and we add a month, that's giving us 7 months in time. So just kind of keep that as a rule of thumb. Take the length of the pattern, add 30 days. That's probably what you're looking at for your long option duration there. So let's build this one as well. We'll go to buy custom with our OCO bracket here, and we're going to use a buy stop order yet again. And we're going to say wait till it gets above 198.46. Our limit, our upside is 219.18, and our downside with our stop is 190.10. Again, no guarantee that the price of the stock could or is going to get filled around that price. That becomes a market order. So we're going to hit confirm and send, and we're going to place that in our price patterns class here. Okay. Everything looks okay. We're always going to RTFK, we're gonna read the freaking order, as Ben would say. So we're gonna hit send, and here we go. It did the math for us. We are going to buy 50 shares or so on that one. Now we have a few minutes left in this class. I know we talked about momentum divergences, to use those with bottoming patterns, because the main focus was bottoming patterns today since the market has put in a bottom, it looks like. We have a few more to run through that are on the watch list, so I will run through those really quick, and you guys can place some of these trades in your paperMoney account if you want to follow along. But another trade that I found was this nice little inverse head and shoulders pattern here on DHR. So you had price leading into the pattern with this strong downtrend. You had lower highs, lower lows. And as that lower low was being made, notice that inside bar, that inside day, or that bullish harami candlestick, where you have the entire range of the day basically enclosed in that prior day's range. And what did you have here? We're looking at momentum divergences today. We're using that. We're having a little bit of a momentum divergence. Now, that could tell us, hey, this may mark the bottom. And then we have to wait for confirmation, which is where we got that close above the high of the low day there. Price ran back right into a valid level of resistance, had one more swing low, which is constructive of the change of a trend. When you have the same high, but yet a higher low, that's telling you that pressure is building up to the upside. And then we haven't gotten a break quite yet. We do have earnings that could be a catalyst, and typically earnings reactions do resolve in the direction of the short-term trend. So if you are looking for a 2% confirmation, that would place an entry right around 203. If you're looking for a measured move, take the entire depth of that pattern and project it from a possible breakout point. That could put a possible profit target around 216 or so. What could you use as a stop? Maybe this breakout candle there. Still a favorable risk to reward there. Let's look at another one. We're going to look at Riot. So we did get a little bit of a breakout here from this double bottom pattern. So we did get that 3% confirmation where price closed above that level, but today it's looking like a little bit of a failed breakout. So, and we are seeing an exhaustion gap here where we saw that gap get filled in a day. So we would wait for a little bit more confirmation there for price to break out again. You do have earnings coming up, but something that did give us a hint to the bottoming process taking place is when that lower low was being crafted, we saw the higher low in the RSI with that momentum, and then we saw that bullish engulfing and price displace from there. Let's look at just a couple more. What is our next one? Netflix. Let's look at Netflix. We had a cup and handle pattern here with a resistance break around 100. If we want to take a measured move from a cup and handle, which is a bottom reversal or a bullish reversal pattern, just with a downtrend leading into it and uptrend leading out to it of it, you have a measured move taking us to those prior highs right around this level, right around 125 or so. Okay. And then let's take a look. Booking. This was another one as well. So we had a downtrend leading into this possible reversal pattern formation. We did not see a divergence in momentum, actually. We're seeing that confirmation with momentum. So we saw price making higher lows with the momentum making higher lows. Now price is really reaching that level of resistance right around 186 or so. A 2% break would land us right around 189. And if we take that measured move, which is the entire depth of that pattern, add it to the breakout point, would you look at that? This is why we love math. Technicians are just fascinated by these things. Again, this is not a guarantee, but that is essentially the measured move of this pattern. And where could you place a stop on the downside? Maybe a low of this candle. So giving another favorable risk to reward setup. But again, these patterns are just possible patterns until we see that confirmed break. So we're going to wait for confirmation. This may give us a few patterns to trade next week, but hopefully this helps as well. I see a question from Barbara. Is the cup and handle stronger than a double bottom? So they are both bullish reversal pattern. So I wouldn't say one is necessarily stronger than the other because you're still going to use that same measured move by taking the entire depth. I would say with the cup and handle, it is typically more of a prolonged distribution than accumulation process. So I guess if you had to say if one is stronger than the other, possibly the cup and handle pattern, just because it is more of that prolonged type of reversal pattern. But of course, cup and handle patterns, double bottoms, we know price is fractal, we know price patterns are all fractal, so they're going to show up across various time frames. They're going to show up with varying lengths of time as well. So always take that into consideration. The time that price took to form that price pattern, it may take that same amount of time to reach that target. A lot of the times it does reach it quicker than that, though, from what I've seen by looking at hundreds and thousands of charts. So I just want to thank you guys all for your questions, engagement in the chat today. You guys make this so fun and one of my favorite classes to teach. I do want to give a huge shout out to Brent Moores for helping us out, answering our questions there. Please follow him on X. He is Brent Moores CS. I am Rachel Dash CS. Please smack or smash that like button, or just give it just a little bit of a thumbs up there for other traders to find this video as well. And then please subscribe to us on Trader Talk Schwab Coaching. Thank you, everyone. See you later, traders.